And it's time now for business with Nona Pelsier, who's joined me in the studio. Nona, so everybody was waiting to see what the Reserve Bank would do today with the official cash rate. And drum roll.
They did nothing. They left it just where it was, which is not what the market was expecting. They were expecting at least a percentage point cut. So that would have taken the interest rate, the official cash rate, down to 0.75%, 0.75% from 1%. But that didn't happen. We're stuck at 1%. And the next opportunity for the Reserve Bank to review the official cash rate is February and then again in May. Some of the banks have come out and said, well, we think the RBNZ got it wrong, which you would, so there you go.
What were the reasons given then for holding?
I think the main reason is that the Reserve Bank is hoping that the government's fiscal policy, which is to spend on infrastructure and so on, will kick in and generate that economic growth, what it's looking for, and to give it a chance. However, the Reserve Bank governor said that they were prepared to move if the economic conditions warranted that. They were, prepared to act if necessary. The ASB Bank came out this afternoon and said, well, yeah, they're going to have to act because as soon as they didn't announce a rate cut, the wholesale interest rates rose about about a 20 basis point hike. So that puts pressure on interest rates, the interest rates we the banks dole out on mortgages. And so there's a potential, not a big potential, but there's a potential for mortgage rates to rise as a result of this. Now, this is still just a risk. There's a lot of moving parts in all of this. But they're saying that basically they think the Reserve Bank got it wrong and that there's going to still be more interest rate cuts in the future, probably in February and again in May.
Well, because the casual listener may be thinking, wow, what's this all about? Because we've got relatively good unemployment, we've got strong growth when you compare us to other countries. Why?
Exactly, and it's very confusing. I mean, the basic problem is spending and uncertainty around investment. And that's not so much something that the New Zealand environment can fix, because a lot of that uncertainty is tied to other issues, global trade, Brexit, the U.S.-China on and off again trade deal, and so on. There's so much risk, and I think that's part of the reason why. So certainly our dollar rose following that because it had been priced in a cut and it hadn't happened. It's really hard. The markets themselves are volatile, and we're going to continue to see that for some time.
Okay, so let's change gears. Main freight.
Very clever.
Thank you. So first half year profit, what was the result?
It was up actually 6%. Pretty good. And one of the reasons why, go figure, is that they're doing better in overseas markets, primarily North America and Europe. Yes, less so in Asia, China specifically. That's partly because of the China trade war and uncertainty about what's happening there. So overall, though, they expect growth to continue. And when I spoke with the managing director, Don Braid, he said that, the economy in New Zealand, he is expecting it to pick up. So he's definitely in the Reserve Bank camp when that comes to that. And the other thing he said was that while there are risks in global trade, there are plenty of opportunities. And he's taken advantage of all of them. He said even Brexit offers opportunities for the company.
Interesting. You mentioned the dollar, so should we crunch the numbers?
Let's do that. Yeah, so we moved about a cent from where we were this morning. It came back a little bit. So the dollar rose to 63.9 US cents. It was above 64 for a little while. 93.5 Australian, so we were at like 92.5 yesterday. And 49.8 British pence.
Oh, we almost made it over the mark.
Almost. The top 50 index, it fell 0.8%, 91 points down to 10,835. Main Freight's result saw their share price rise nearly 2%, although it was losing ground at the end of the day, and that's because the jitters have returned to the Asian markets over the on-again, off-again U.S.-China trade talks.
Thanks, Nona. Nona Pelsier with our business update.